Joining us now to discuss the state of housing, Taylor Morrison, Chair and CEO Sheryl Palmer. Sheryl, great to have you on the show. And I do want to get your thoughts on some of the housing data we've gotten and what's poised to be an even busier week in terms of that data right now. Specifically, I want to start with excuse me. I want to start with the numbers we saw this morning and what they're suggesting about forward demand as we look to 2023.
Well, thanks for having me, Morgan. Really nice to see you. Yeah, the numbers this morning I don't think were quite surprising. I mean, starts were down. I haven't had an opportunity to really dig into them, but I think starts were down about 32% year over year, but just a little bit sequentially. Permits were down a little less than that. I think more than anything, it's very hard to take 1 month of numbers and arrive at some real conclusions. I think there's a disconnect for what we're seeing happening in real time in the field and the lag effect of those numbers. Builders, for the most part, I think are aligning starts, permits, obviously, before starts, to what they're seeing in the field and sales demand. And then you obviously also have the seasonality that certainly is back into the business as we move into the holiday season.
So it sounds like what you're saying is that you're seeing in the field, you're seeing a slowdown, and maybe a slowdown faster than expected?
I think we've been seeing a slowdown that actually accelerated early in the fourth quarter. I mean, when rates started moving to, Morgan, what was close to 8%, 60 days ago, that certainly had an effect on the consumer. And now, once again, we're moving into that traditional season. But absolutely, I think we entered what I would call a housing recession over the last many months. And we have seen a slowdown because there's a good deal of inventory in the new home market that's been being built since early in the year. Very different than what we're seeing in the existing home market, where we really are somewhat constrained from an inventory standpoint. I think what that means is as we move into next year, we should expect that overall volumes will drop from the peak levels we saw in 2022.
So what does that mean for pricing of new homes? Are we seeing those start to come under pressure? And just as importantly, what does it mean for builder incentives?
Absolutely. Pricing has, I think, been, moving down a bit since I would say early summer. And then I think the pace of some of those incentives or adjustments has continued as we've moved into the fourth quarter. But the way I would look at it, Morgan, it's actually a wonderful opportunity. It's actually a wonderful time for the consumer to go out into the market. Because if I roll back to last year or even the spring of this year, there was no choice for the consumer. It was difficult for them to secure a home. It didn't matter if we were talking in the resale market or new. Today, there's actually product available. A consumer has choice of lots. They can really build the, home of their dreams. And at the same time, to your point, the builders are helping them. I think you're seeing that through incentives that are really focused on the finance side, and it can be rate buy downs. It can allow you to ease into a mortgage rate over 2 or 3 years, or it can be a permanent buy down. It's really good, responsible lending that we're seeing. And it allows the consumer to have full transparency and understand what their mortgage payment will be for years to come.